Nova Health is an acquisitive home healthcare services company providing continuum of care services focused on dementia care in Canada and the US. CEO Chris Dobbin is here to discuss the company's recent Q1 financial results, which showed strong margins and increased profitability. I'm Martin Gago with Market Radius Research. It's Thursday, May the 16th. Please remember, this is neither recommendation or investment advice. We're here to learn about the company. Chris, welcome. Congrats on putting out some solid Q1 results last week. Thanks for joining us to talk over the results.
Thanks, Martin. Appreciate you having me on again. Good to see you.
Good seeing you. Yeah, you seem to be hitting a bit of a cadence of not so much volatility as you were having beforehand. You got a good stride. Can you just give us a quick key numbers out of the quarter and what that means for Nova Leap?
I think the most important things for investors to realize for Nova Leap, the last 3 or 4 quarters, we've continued to produce pretty good results. EBIT has been strong throughout the last year, and we paid off our debt at the end of last year. So really at this point for us, it's really about re-engaging in the acquisition program and adding additional revenue and EBITDA through M&A. So that's really the plan or focus at this point in time.
So can you just talk about, you had positive cash generation in the quarter, that's right?
We did, yeah. I've said publicly before, and these numbers come from just conversations I've had with a bunch of investors across the country. But I think the fact that we're cash flow positive with no bank debt puts us probably in the top 5% of TSXV companies. So
honestly, in terms of that, I think you get a little higher than the top 5%.
We may very well be. I'm trying to be a little bit conservative, but
you may be a 1%er there. So
maybe we're 1%er, but we're certainly in a good spot by the fact that we continue to produce positive cash flows. We have no debt. So yeah. From my perspective, it's a great spot to be for our company, and I think that bodes pretty well for us as we re-engage the M&A.
Yeah. And so you have no bank debt, and how much cash roughly do you have on the balance sheet at the end of the quarter?
Yeah, we finished with about $1.1 million US.
Okay. And then I believe it was after the quarter, you then actually announced an acquisition, a relatively small one, right?
Yeah, we closed on one, I think, 2 weeks ago now in Massachusetts. So this would be a deal that's a little bit smaller than what we would normally want to do, but we did it because it's in Massachusetts where we already have a number of locations. And so, roughly $100,000 EBITDA, we paid 3 times, which was a combination of $250,000 cash on closing and then another $50,000 over a 2-year period by way of a promissory note. But we just paid cash, obviously just given the size of the transaction, and that roughly equaled, I guess, what we would have produced in cash flow for Q1 of 2024.
Do you get any immediate synergy? Like, are you able to immediately enhance the profitability by just rolling in some of their overhead into yours and just streamlining things, or does it basically just add $100,000 of EBITDA to your cash flows?
Well, I think at the beginning it'll be additive, meaning that the EBITDA will come over.
Okay.
But there are a number of things in that particular agency that we have to improve on, and so they were not using an electronic software system for scheduling, and of course we do that in all of our agencies. So there is some technology implementation that we have to bring to that particular company. And there are a few things actually around technology to make it much more efficient, relative to how we operate our other agencies. But the big upside that we see in that market is that it's a smaller agency. We actually have sales people in that area, and so we think that there's an ability to grow the revenue and EBITDA over time, and so that's why we're most excited about that particular agency, even though it's very small to start with.
All right, you should be able to get some good leverage off that. All right. And on the quarter, everything went, the labor side of things is going well, and the customer side of things are going well. Anything notable on hiring practices or customer acquisition?
Pretty quiet quarter. I mean, it was pretty consistent for us. Nothing really to speak of, I think, on either client or on the staffing side. It's been pretty consistent over the last couple of quarters. So it was a pretty uneventful, pretty quiet quarter. But obviously, we've just re-engaged M&A, and so our focus for the remainder of the year is really to add more deals at this point.
Gotcha. And hiring, the labor market is it's really stabilized, pretty consistent now.
Same as it's been. I mean, again, we'd love to have more caregivers,
Yeah.
but you know, it's been getting better, which is obviously good for us.
All right. Excellent. And so the operations are running pretty smoothly, and I
Mhm.
guess more of your attention now is trying to filter through on the acquisition front. Anything you can comment on how that funnel is kind of looking at right now, or any sort of uh, is it an engaged environment for acquisitions?
Yeah, I've actually seen more acquisition opportunities now than what we would have seen at the beginning of the year. So that's positive from our perspective. Our pipeline is generally pretty full in terms of acquisition opportunities in front of us, and that remains so at this point in time.
Yeah,
Um, we wouldn't be able to handle all the acquisition opportunities that sort of present themselves.
yeah,
So acquisition opportunities are sort of the least of our worry. It's really about picking the ones and ranking the ones that
yeah,
we think are best for us, and then having discussions with the owners around that. So that's really what we're engaged in at this particular point in time.
yeah,
I think for investors, if there was one document that they could refer themselves to, it'd probably be the shareholder letter, the CEO letter that I put to shareholders, which would have been, can't remember the exact date, but I think it was early March. That sort of laid out where we were and what we're trying to accomplish. And so we've used this baseline of being, you know, roughly a million five US of EBITDA where we are right now. But we're looking to double that. And the way to do that is to continue to make improvements in the underlying operations as well as adding M&A. And so the good spot about where we are as a company right now is that we have access to debt and we don't need to
yeah,
raise equity. And so that's a great spot for us. And so we can leverage up at an appropriate multiple and add M&A through additional debt. And so if we can do that with the right deals and execute those post closing, then I think that puts us on a good path to $3 million US of EBITDA, and that's really where our focus is at the moment.
Do you have a rough metric of what kind of, let's say, debt to EBITDA ratio you would be comfortable with going forward?
Yeah, 3 times.
3 times. All right.
Yeah.
So I don't know, you've got $1 million in the bank. Uh, you, I just sort of back of the brain math here. You could and you're like, what is a typical, the smaller acquisition was done at 3 times EBITDA. I presume you would be willing to pay a little bit more for a larger acquisition, and obviously how much there are lots of parameters in there that adjust the multiple, but is 3 to 5 times EBITDA multiple the sort of expected range?
Think so. I mean, on the smaller end, like the one we just did, obviously was 3x, but you know,
Yeah,
ones that are you know, more established or more profitable or a different size or in a particular market that we really like, then maybe that's a
yeah,
5, right? It all depends on the deal. But I think the
yeah,
way to think about it is, you know, if we were at $3 million US of EBITDA, then usually the max debt that we would want to put on would be 9 million, right? And
yeah,
we're not really looking at going from 0 to 9 right away. To us, it's about, you know, we just added the little deal. You know, we'd like to do
yeah,
another transaction soon. You know, get the next one, you know, integrated, add another one. You know, perfect world, I'd like to do 2 to 3 more this year. I think that would be that, you know, that's my wish list, right? I'd like to do
yeah,
that. And so because I'd like to do that, that's really what we're focused on. And
yeah.
if we can do that well, then I think, you know, I think we scale much, you know, more beyond sort of where we are today as a publicly traded company, and I think we become much more attractive to the investor community.
And ideally, would let's say a an acquisition, what in the 300 to $500,000 EBITDA be kind of the sweet spot, or
Yeah, it would be. Yeah,
okay,
yeah, it would be. I mean, we've looked at some. I mean, certainly in the past, we've looked at ones much larger than that, and but you know, we're generally looking in that range. I mean, the average of these mom and pop agencies is kind of in there. They're smaller by nature, obviously.
yeah,
Yeah, it definitely would fit well within our sweet spot, and that's typically what we look at.
okay, all right. So these could be like ideally $1 to $2 million acquisitions. If it's 300 to 500 grand with 3 to 5 times multiple, you're getting somewhere
Yeah.
around there.
Yeah, like if it was $300,000 and we paid 5x, then obviously you're looking at, $1.5 million. Now that's not all normally cash on closing. Sometimes there's vendor takebacks.
Yeah.
Sometimes there's a valuation gap or something that's a little bit different about it, then we might have an earnout provision. But I mean, you could always go back to look at all their transactions. They're pretty consistent.
Yeah. Yeah. All right. Excellent. All right. Well, that was a pretty straightforward quarter and good strategy. And yes, I do recommend people interested read that shareholder letter back from March. It was excellent, very well written. And well, any final comments before we wrap it up here?
I don't think so. I think keep an eye on us and really take a look at whether or not we're adding more EBITDA and more revenue by way of M&A and then make a decision of whether or not we're the right opportunity. That's all I can ask at this particular point in time.
Excellent. All right. Thank you very much. Great to see you and talk to you again soon.
Thanks, Martin. Appreciate it.